You're welcome back. If you just joined us, you're watching Business Incorporated. We're coming to you from Channels Television. Now, the Central Bank of Nigeria is expected to license 20 new international money transfer operators in the coming weeks to handle an estimated $21 billion annual diaspora remittances into the country. Let's get some perspectives as to how the market got this news in terms of the forex market now. We have joining us on the show, Ifueko Lotu, a forex dealer with Access Bank. Ifueko, thank you for your time.
Good afternoon.
Good afternoon. What is your reaction? What is your view on this planned licensing of 20 new IMTOs in a few weeks' time?
So I didn't get that.
What is your reaction to the news that the central bank will be licensing 20 new international money transfer operators in the country in the next few weeks?
Oh, okay. I think that's a very good development, especially in regards to the FX inflows we should expect from the increased number of IMTOs, particularly because most of these funds are for we call them invisible transactions now. And usually those are the requests that cause speculative attacks on our currency. So we're talking school fees, PTAs, mortgage, and all of those things. So if we can get more of those inflows and attend to such requests, we will not see that pressure in the parallel market. So it's a welcome development, and we're happy about that.
In terms of the stoppage of the use of Naira debit cards abroad, what has been the reaction like in terms of the demand from customers for forex?
Sorry, I'm trying hard to hear you. Can you say that again?
Yesterday we talked about the banning of Naira debit cards for foreign transactions by banks.
Mm-hmm.
Okay, what has been the demand for forex like based on this development?
Well, the demand is still there, and they still see Nigerians wanting to use their cards. Well, especially in the peak periods of summer and all of that. But essentially you can't sell what you don't have. So if the liquidity is low, it will affect all of the banks, and then we will not be able to attend to all of the requests. So, yes, the demand is still there, but we only have it for peak periods.
Just one more question. Okay, just before I let you go, Fueko, talk to us about today's Naira trading value against other currencies.
Well, the volume in the USD NGM market was pretty low today. I don't think it crossed the $5 million ban. However, the rates are still maintained at about 315, and we should hopefully see CBN anytime intervening from now.
Ifueko Olotu, forex dealer with Access Bank, thank you so much for your time. Let's quickly take you to the commodities market where we're seeing how farmers are coping with harvests and climate change and how these have impacted on the various crops. Chiamaka Ajebu is a research analyst with the Financial Derivatives Company Limited, and she joins me from Lagos. Chiamaka, thank you for coming on the show.
Thank you for having me.
Now, major cocoa growers in West Africa have started their crop harvest, dragging down cocoa prices about 1%. How long do you think prices will stay low?
Yes, prices are staying low depending on the duration of harvest. And we expect the harvest season to run into a few weeks of next year. So cocoa prices are significantly, but then cocoa is a commodity that is highly susceptible to weather conditions. So depending on the favorability of the weather, cocoa prices are factoring out that factor. Cocoa prices are significantly low.
Okay, we're trying to deal with that audio, but if you can hear me, let me ask you this question. As we head into the into the year-end season at the domestic front, do you see high prices for staples like rice, now above 20,000 naira, and other agri-commodities?
Yes, we expect prices to maintain an upward trajectory because we're heading into the best season. However, relative to last year's demand, prices are not going to be as high as last year's prices due to the lower spending capacity of citizens in the country.
Okay, thank you so much, Chiamaka Jegu, research analyst with the Financial Derivatives Company Limited. The Emirates airline has indicated plans to reduce the frequency of its flights to African cities or cut routes completely if current economic and financial challenges of the continent continue. According to the president of the airlines, Tim Clark, it has become unprofitable flying routes with difficult economic conditions. Foreign airlines flying to Nigeria have started to refuel abroad because jet fuel supplies there have become more expensive and scarce as the country battles a hard currency shortage. Emirates has started a detour to Accra, Ghana to refuel its daily Abuja-bound flights. The airline had already cut its twice daily flights to Lagos and Abuja to just one. He added that the Emirates load factor, a measure of capacity utilization for the rest of 2016 and 2017, would probably be in the mid-70s and to low 80s in percentage terms. Meanwhile, shares in Kenya Airways jumped 6.5% in early trade today after pilots suspended a planned strike following talks between the union. The pilot union, CALPA, had called for an indefinite strike to start on Tuesday to demand management changes at the loss-making airline, which is partly owned by both the government and Air France KLM. The union, airline executives and government held talks on Monday to avert action that officials said would hurt the carrier's slow recovery. A new chairman was named after the talks, meeting part of the pilot's demand. The shares rose as high as 4 shillings before giving up some of the gains to trade at 4.7 shillings. And finally on the program, Ivory Coast will invest about 100 billion CFA francs on expanding its fiber optic telecoms network by 5,000 kilometers, making internet services cheaper and more accessible across the country. According to the Minister for the Digital Economy and Postal Services, Bruno Kone, the government has chosen French companies and that of Morocco's Sigelec to complete the project. The project, which will include the laying of 3 undersea cables, will start before the end of 2016 and will take between 18 months and 2 years to complete, adding that internet prices will fall considerably as a result. Ivory Coast, a former French colony, is the world's top cocoa producer, but its economic development has been hampered by a decade of political turmoil and civil conflict. An existing fiber optic network comprises some 2,000 kilometers of cables. And that's all we'll bring your way on Business Incorporated. Thank you so much for watching. I am Bolaji Akinwale. See you next time.